Good day everyone and welcome to another quarterly report. Just yesterday, Danish Konsolidator closed their books on the first quarter of 2022, and with me here in the studio I have its CEO Claus Finderup Grove. Welcome.
Thank you very much.
So you have prepared a presentation, and without further ado I'll give you the word, after which I'll return to ask some questions.
Thank you very much. Yes, thank you for being here. I will give you a fairly fast presentation of Konsolidator. I believe many of you have not heard about Konsolidator before. So we are a Danish company, and I will give you a fairly brief introduction to us. So first I will tell you a little bit about the company and the product and where we are in the world. And then I will also tell you a little bit about our strong growth we had in Q1 of this year. And then I will also give you a little insight in our new strategy. We came out with a new strategy in January this year for the next 3 years, and also present that to you also fairly fast. Today we have 227 customers active in 19 countries. I'm sorry, this number that we see here, that is from 31st of December. So that has been updated, but Konsolidator is a company that can sell its product all over the world. We are what we call country agnostic. We are software that is put on top of ERP system and then drag numbers out from the ERP system into Konsolidator and then do the financial consolidation. And that we can do throughout the world. That's the reason why we have customer in so many countries. A little bit about what we are doing, so you just get a conceptual understanding on what we are doing. As I said, we are software. We are a software as a service company that do financial consolidation. And financial consolidation, that is all about adding numbers together to take all subsidiaries in a group and add those subsidiaries together to a set of group accounts. That is what we do. And the theory behind Konsolidator is that consolidation is at one hand very simple, because it, as I said, adding numbers together, and is universal because 2 + 2 is 4 all over the world. So what we do is, as I said, adding these numbers together to a set of group account. But on the other hand, it's also a very complex task to do, because consolidation, that is, for example, translating currencies. It's about eliminating for internal transaction, and it's also about eliminating for minorities. So it is fairly complex. And that is, of course, what our machine is doing, and that is what we are fairly successful with by selling around the world. We do have competitors, that is not a secret at all, but we have kind of found our own way of doing financial consolidation. So we don't really have that many competitors that is doing exactly the same way as we are doing it, and that is mainly because we are born on cloud. We are a fairly new company, we are only 6 years old, so we are born and built in cloud, and is running after those group that is today is using Excel for consolidation. You can see there is 3 other types of doing consolidation in ERP system, in BI system, and CPM system. And that is not what we normally are seeing as our competitors, because we are running after the smaller groups that is doing it in Excel. But all of those can do it much smarter and much more efficient and much more correct by using our product. So that is the type of customers that we are running after. We are a growth company, and that's of course very important for all investors when they look into a company like ours. We are a SaaS company, and we are also growing fairly fast. This is our growth for the past years, and as you can see, we are growing fairly fast, where we have been growing at more than 70% since we started. And Q1 has also gone on from a fairly okay start, where we have grown 55%. Not compared to 31st December, but compared to Q1 last year. So we are a growth company, and we expect to grow with a high pace also in the future, which I will also describe a little bit when we get to our guidance. As I said, we have made a new strategy, or you can say a revised strategy, and not to go too much in detail on our new strategy. What is it mainly about is that we got listed on Nasdaq in 2019, where we had a strategy, a 3-year strategy that was from 19 to 21, And we have, of course, got some experience from that. As you can see, we grew with 428% in that period, so we also grow very fast in that period. And now we are moving into a new 3 years period, where we will use the experience we got from the first 3 years. So you can see there's a column called personal sales, both in 19 to 21, and also in the column 22 to 24. And that is, of course, because we will continue of what we have been doing so far, where we are selling what we call direct in Denmark and in Sweden, in England and in Germany, and that we will continue with. But we can also see that there is a huge potential for a product like Konsolidator, broader than just those 3 markets. So we have found a way to how we can attract customers in the region, what we call a global region or rest of the world. And that is we're doing through what is called a product-led growth. So we have added another sales channel to our channel in this new 3 years strategy. And just to understand that this personal sales that we have continuously doing, that is mainly for the larger part of our potential customers. And the product-led growth, that is for very, very small groups, where we had a chance to get in there and sell our product to very small groups. And what it's all about when you're talking to a group in this size, that is to do it cheap. This is a SaaS metric called CAC, customer acquisition cost. If you're able to attract and onboard customers in this segment, then you can also grow profitable in this segment. And that is what we are trying to accomplish in the next 3 years. So just to conclude on that, we will continue with the personal sales in the 4 direct markets, and then we will to see whether we can grow even faster on the product-led growth in a broader geography. Why should you invest in Konsolidator? As I said, we will continue our growth. We have guided with 40 to 60% growth the next 3 years, which we believe we can accomplish. As you can see, we grew with 55% in the first quarter, so we got up from a fairly good start. And we have also been able to reduce the cost, which we announced a month ago. So now we have actually also improved our EBIT guidance for the next 3 years, where we expect to be profitable in 2024. That is our expectation so far. Why should you invest in a company like Konsolidator? We are international, what we call a truly international scalable product. We have fairly limited competition. We have a fairly low customer churn. Even if it grow a little bit in Q1, then it's still considered very low churn. And then we are what we call recurring revenue. So those revenue, when we announce our ARR, that is what we know we will get for the next coming of years, of course, except the churn. So we believe we are fairly attractive for investors that are looking for SaaS products. Thank you. That was my presentation. Thank you for that.
Thank you very much, Claus. It was lovely to listen to. Before I go into the report and ask some questions regarding that, I wanted to know a little bit more about the product. During 2021, you managed to grow your customer base from 138 customers across 12 countries to 224 across 18. How would you describe the process of attracting new customers as well as entering new countries with your product?
Yes, very good questions. In general, in our 4 direct markets, Denmark, Sweden, England and Germany, there we are both doing outbound reach, as it's called. I mean, we are calling, trying to find customers and calling on and ask them whether they want a meeting with us. That is what is called outbound reach. But we're also doing inbound reach, and that means that we are doing all kind of digital marketing for our product, and there you can go global. As long as they speak English, then we can attract all customers from around the world. So that we are doing inbound. So when someone is sitting in South Africa and Googling financial consolidation, then Konsolidator pops up, and then if they ask a meeting, then we take the meeting, again, as long as they speak English, then we can take the meeting, and if they like Konsolidator, then we can also onboard them. So actually, all customers from outside these 4 markets are from what we call inbound. So we're not doing any proactively, for example, in South Africa or in Zambia, in Canada and US, and where we have customers from. That is digital marketing, and they ask us for meetings, and then we get them from there.
It's passive marketing, selling your more or less letting the product sell itself.
Yeah, exactly. That's what we're trying to accomplish, yeah.
I see. So we'll get now into the report. You reported a revenue of 3.7 million Danish crowns for the quarter. This is a 71% increase comparison to last year's first quarter. It is a decrease, however, in comparison to last quarter. Annual recurring revenue increased, however, in line with your expectations at 55%. Are you satisfied with these results?
Yes, very satisfied. Q1 was a difficult quarter. I mean, no doubt, and it was you can say a strange and a little bit funny quarter. And it's correct. I mean, you can say it's correct that our total revenue decreased compared to Q4. Our ARR, I mean, our income from subscription increased, but I mean, we had a very high income in Q4 from consultancy, and that is normal in Q4 where customers need our additional help in order to close their book. And it's also normal that Q1 is low because all our customers are very occupied in closing their annual reports. So the consultants fee dropped a lot in Q1, but that is normal, and our subscription increased. So that is as expected. But Q1 is a funny quarter where it started out very difficult in January, or I don't say difficult, but we were sick. Many of us were sick because of Corona, both ourselves and also those that we had the meeting for. So we started out slowly in January, but then we are picked up in February and March, and now we're back on full speed again, all of us.
That is good to hear. So we talked a little bit about the customers and the countries that you have, and exiting 2021 you had 224 across 18. During this quarter you have gained 15 new customers as well as another country. I thought we could begin with the customers. Who are they?
In general, or the new one?
The new ones.
The new one. I mean, as I recall, we got 5 from Denmark, 5 from Sweden, and then the rest 5 was from different countries, England and Germany. We got, as I said, one new country, and that was Estonia. So that's good. I mean, in general, all our customers, they are customers that have around 500 million Swedish kronor in annual revenue, have some subsidiaries outside their domestic countries, and has some kind of complexity in their consolidation. That is our average customer, and also in Q1.
Is there any specific industry or names you can share?
No, we don't have an industry. I mean, consolidation, financial consolidation, all kind of industries need to do that. So you can be industry agnostic. So that is not what we are looking after. We are more looking after, I mean, are they international groups? Do they have some kind of complexity, but not too big groups? That is those that we are looking for.
I see. The churn rate for the quarter was a little bit higher than usual, landing at 7.7%. It was stated in your CEO letter that this was sourced in or during the onboarding process of your customers. The features launched in February aims to address this. What can you tell us about these features?
In general, I mean, the churn of 7.7 is for us high. Last year we were at 4%, and as you said, it's because of the onboarding. In general, our product is fairly sticky. So first, when customers has, I mean, signed us and onboarded and used us for a couple of months, then it's very sticky. It's very, very rare that we are losing a customer that has used us for 5 to 8 months. That's very rarely. But it's correct. I mean, we grew very fast last year, and some of these customers maybe found the onboarding process a little bit too cumbersome, and therefore they terminated the contract. So, this is one of that is extremely important for us. If we want to grow fast, also global, we need to have the onboarding doing more like plug and play. So we are working a lot on doing the onboarding even easier, so we become a fully plug and play product. So yes, we launched the self onboarding a couple of months ago, and we also have these integration to ERP system, for example, Fort Knox here in Sweden, which will also both make, you can say, the value of our product higher, but it will also make the onboarding easier for customers, and that should also reduce the onboarding churn going forward.
Something that was mentioned in the presentation as well as the report was cost reductions. What measures are being taken?
In general, what we have done is that we've been in and see. I mean, when we got listed back in 2019, we got some funds, and then you start to hire a lot of for employees. That is also what we did. We grew from 8 to 40 people in 2.5 years, and then we have kind of looked at it and say, okay, how much do we actually need? If we, I mean, what's the lowest kind of cost we can still continue the growth of 40 to 6%. And that is what I've been looking at, and then we reduced the cost with, I think, with around 15% end of March. So we can still continue to grow the 40 to 60%, but as a lower cost base. So that was what we did in March.
I see. Moving onwards then to finish off, from Q1 and into Q2, you leave the quarter with negative equity and stated further that you aim to re-establish this equity before Q3. You're currently looking into alternatives. Could you tell us more?
I mean, no doubt. I mean, we are a growth company, so we are a company that is depending on cash, and we like to do that through equity. Again, January and February was difficult. I mean, we started to look for new equity in the beginning of the year, but January and February was kind of difficult. I mean, the capital market was more or less frozen. So now it has started up again here from March, and we are optimistic that we will find some cash before the end of Q2. That's at least our plans.
So the market for acquiring and securing finance is getting better.
It is getting better. It's still difficult, but it's getting better. January was really horrible, but it's getting better.
I see. Well, thank you very much, Claus, for your time, and I will wish both you and Konsolidator continued luck in the future.
Thank you. Thank you for being here.